This is a state proposition here in the state of California. Thank you, Dill, for pulling that up.
Got you.
Very, very important because this is obviously can significantly, impair the business model that Uber and Lyft have by virtue of what was originally AB5, which was a state bill back in 2019 that reclassified workers, or specifically put a litmus test, a more stringent testing procedure on whether or not they are a worker, employed worker for a company, or if they're a contractor by trade. And so what Prop 22 ended up doing was fought the AB5 bill and said, let's look at this in a different reign, because we are specifically focused on contractor positions. We have no intent to hire people, and it's really based on the model that people can work when they want, on demand of employment opportunities. And so we've seen that across, many states are kind of looking at this, even countries are looking at this, but in California, this is really the paradigm that people are looking at, because there's such a high population. We're the 10th biggest economy in the world. So there's a lot of things that we need to be looking at, as this can have profound impacts to folks. And so in particular, there's some stats that I do want to pull up, because I'll loop this back to stocks at some point. But specifically, there's Uber Eats. So apart from driving, there's also the Uber Eats side of it. So Uber hasn't made profits since they began, specifically in the ride-hailing services. What I think could happen is, obviously, they could pivot and go towards Uber Eats. Thank you for pulling up the graph. And so through that, we're looking at here in the States, we have Grubhub, DoorDash, Uber Eats, and Postmates. And you're seeing DoorDash is taking off, and Grubhub is actually dropping, and Uber's somewhere in the middle, trying to figure out how can they make their business model work. And so that, I think, could be the pivotal moment, for them, because the ride-hailing service is obviously very contentious, and there's many laws and policies, and that's something that I look at first when there's an endeavor, either a new foray into business, a blue ocean strategy we'll call it, where there's no competition. You're the first one to get slammed with all the policies and laws and regulations, because you're the first one to go into it. And so they're still trying to recover from all the money that they put in, for example, in the Prop 22, where many of these on-demand services and ride-hailing services like Lyft, Uber, and several others put in over $200 million to lobby for Prop 22 to continue going forward. So strong implications here. As we see with Uber Eats, one of the big items that I'm looking at, to generate $4.8 billion in revenue, which is a significant number for them. And there's another stat, sorry, I had it somewhere here.
I think that's all that was, how much they pay per order.
Yeah, it's a little over what they pull in. Yeah, $43.
Yeah.
$43.50 to deliver an average order of $40. So they're losing $3.50 per order that they're putting out there. But what I thought was also interesting, just out of my wonky side, is you have Uber here. You would think by having more accessibility and prevalence in certain areas and countries, you would make more. But I looked over here at this Meituan. They're based out of China. They're actually a trade company that has a bunch of items. They're a financial institution, and they're backing certain endeavors such as Meituan. So they're, I think, strictly based out of China. They're one country, and their revenue is $7.2 billion. Where you have Uber their marketing increases. They have to hire staff to deal with the legalese of going into other countries. So the revenue is 4.8, and they're in 45 countries. And so you're seeing kind of a spat of different things happening here simultaneously. Boone, if you have anything, I'm curious.
I have a question for you. Long term, as investments, do you think these are good investments in the long term?
It's a very good question.
Would you buy a DoorDash or Uber stock?
I think a lot of it.
Data we're seeing.
Yeah, and we've seen the ebb and flow. So it's all based on policy at the end of the day here. Because if they win Prop 22, you're going to see an influx of cash going into the company because they made a win. And theoretically, their business model is based on contracting. So if that wins, and that could trickle down, obviously, to the food distribution, like Uber Eats and some of the other folks. So I am keeping an eye on it just in case. But there's also competition is heavy in this field now that they were on the forefront of this whole thing, and so they paid their dues, so to speak. But then you got people like Didi, who's out of China, I could see them wanting to come to the U.S. and competing, with their own platform. Maybe it's renamed and somebody else picks up their business model, if you will. But there's just too many regulations that are stymieing the growth of these companies, and ultimately that's what's going to kick us in the arse. And when you have to pay $43.50 to drive an order for 40, that's a $40 order. Like
Yeah.
somehow they're maintaining relevance and investment by virtue of losing money. Like, so for me, I don't see that as an opportunity right now. But if they can jump that hurdle, it's not unsurmountable, but it is going to come at a cost fiscally and time, quite frankly. So, but along those lines, because there's another thing, there's survey data that came out, which is pretty interesting considering the impositions here that the government's trying to do or intervene on the private market. And 77% of Lyft drivers, to be noted, indicated that they had health coverage from another source, and 94% are driving less than 20 hours a week, so making Lyft a part-time job. So part of the debate here from Prop 22 position is saying these people deserve health care, these people deserve other rights. However, when 94% of them are driving part-time, now you're also driving up the
Like a
costs.
weekend job.
Yeah, it's a weekend hustle. Maybe it's like people have kids. Women are disproportionately working these jobs because they are typically the caretaker at home. My family, we've split it 50-50, but we're not every family. So for us, it's how we as a community, as employees, if you will, or contractors rather, that's the beauty of this opportunity here. Because once you become an employee, there's employment taxes, there's health insurance, there's all these other rules and regulations that add to the cost. So that $40 order doesn't go down from $35.50. It actually probably goes to $45 or more because you have to cover the overhead. So then this business model does not become feasible. So the pivotal moment here to your question, going back to it, Dill, is Prop 22. This is really the watershed moment. If they can continue by adopting or enabling Prop 22 to remain, that's what's going to make this company successful. If not,
That increases their profits, right?
yeah, it constitutes people as being contractors as opposed to employees. So the legal implications of this is heavy. You have the union side, rightfully so. They want folks to be employed, but also when they surveyed folks, they said, we don't care about being fully employed or for the benefits. We just like the mere fact that we have an opportunity to work when we want on demand. We can clock in and clock out at our will. And so it's interesting. SEIU and some of the other hardcore labor folks are heavily ingrained in this. It gives them a reason to fight. I'm about employee rights, but these aren't employees. So you got to think about it that way. But yeah, Uber and Lyft, they've never been profitable. I think by going the food route, they could be. However, there's also some legal items that they have to work out with that as well in terms of how much are they charging, what are their fee rates, etc., to make it work. But Lyft lost 1.8 billion in 2020 and 2.6 in the year prior, and they finally have reached some sort of profitability through EBITDA. But you can kind of fudge those books a little bit to make it look like you made some money. But even then, Uber loses $4 billion a year, man. Like,
I think what's interesting on the food side thing is, so Uber and such, they should have had their best year ever in 2020, right? Like, that should have been the peak part of their business, as nobody could eat in restaurants, nobody could go in person, and that should have been your best year ever, and you should have your best margins, had your best growth. And when you have to think about it, we're heading back into a period where people are going back into restaurants. And I think what we're seeing is that in the U.S. economy, people love to eat out in person.
yeah.
I think we could compare that to other economies. Like, even the U.S., even we compare, like, this is a separate topic, but as a counterpoint, like, e-commerce is way smaller in the U.S. than it is in China. And it's because the consumer is different. And I still think we have a substantial amount of years until eating out at restaurants is not as big of a thing as it is today. And I think, like, if I think about these businesses, is they have such small profit margins, and like, they're just making, someone makes, was canceled through, that's wild. But like, if someone someone makes a $50 order, how much money are they making on that $50 order? Maybe like $5 or something, 10% maybe on that order, if not less. And when I think about it, is at least consumer. I think when it comes to higher priced, because I think they did have a pretty high average order value on there, but
Mm-hmm.
when I think about eating out, like I don't think most, and I could be wrong because I don't know all the data, but I assume that people like to eat out in nicer restaurants in person. Average user spend, but what is that? Is that per order? Where it said $200
That's
last
average.
time?
Yeah. Yeah, I think that's the average user spend.
I think it was like
There's a better
lifetime value
number.
or something
Yeah, there's a
per
better
year.
number here.
But like
I'll
when I
find
think
it.
about it, no one's gonna order Uber Eats for a steak dinner,
Yeah,
you
you're
know.
not.
And when I think about Uber and all these companies do the food delivery, they the way they make more money is when orders are larger. And I think most people don't order expensive food through Uber Eats. It's fast food. It's maybe McDonald's or maybe your local burger joint or something like that. And so when I think about it, as the economy opens up, people love to eat out. That means their average order values are going to come down, which means their revenue comes down, which means their profit
Mm-hmm.
margins are smaller or negative. And
Yeah,
so in the short term, I don't see a lot of positive for these companies on the food delivery side of things. I think in the
that's tough.
long term, when we have automated vehicles and they don't need drivers anymore, and they'll have much larger profit margins, I could see that being a thing. But that's so far down the line. But in the
Yeah, they
short
got to
term,
get
I
through the
think it's a lot of
regulatory
headwind.
hoops.
Yeah,
100%. 100%. There's too much headwind that they're going through right now
yeah,
to make it profitable. I'm actually curious why people are still putting money into this.
yeah.
Year over
Well,
year, they're fundraising and making it
yeah, they're still
happen. But
losing money.
it's interesting. I mean, they've been here a while. On the flip side, Travis Kalanick, what was his last name?
Sure.
Whatever. Travis, the founder of Uber, he's actually opening
Uh,
up a ghost kitchen
oh yeah,
in
you're telling me about that.
San Jose, like in downtown. So it's pretty interesting. Uh,
Smart.
hey, what up, Jake? It's all
What's up,
good,
Jake?
man.
Coming by, man.
But exactly to your
Well,
point, the revenue did get bumped, but the trajectory they have here it's insane to say, they went from 1.9 to 4.8. I could see that coming right down, the
yeah,
following year being cut in
it'll
half or
come back
whatever.
down to like 2.5 or 3 or something maybe this year.
Yeah. And Uber, DoorDash has taken predominantly most of the market share anyway. At this point, I think they're at 45% or
Yeah,
something.
Dash has
Um,
definitely moved ahead of them.
but yeah, where are they at? 56 at this point. For Uber in the US, yeah, all the competitors are right here on the right side of the screen, King. So Postmates actually, weren't they bought by Uber Eats? DoorDash and Grubhub. So you
Yeah, I
have
think so.
Uber's still nowhere there or some here. Yeah, DoorDash is surpassing. They've got the business model down. In fact, they got a little hard to hear chill deal. Let me boost them up. Sorry about that. Sounds good on my side. All right. But yeah, so
Move my
DoorDash
mic no closer.
and DoorDash has a couple different revenue sources coming into play. They just, I won't say where, but they just pulled a permit to do a storefront in a city and in a metro city.
Smart.
And so, yeah, they want on-demand goods to be readily available to folks. Kind of like a warehouse where they're going to store everything, but they'll have a walk-up counter. But it's predominantly a distribution center in a downtown. So ideally, if people want milk like this, and they, Safeway charges $10 because we just placed an order today to deliver, $10 to deliver, how much ever your order is. Does that make sense? And a lot of people, the average rate, I know Target does it for $10. That's kind of the going number. I think like DoorDash and some of these other folks can do it at half the cost, maybe $6-7. I might as
Yeah.
well. But I know that's also been the problem for the drivers. Is the tip originally was actually going to DoorDash and some of these other folks, but in the food delivery in particular, they were a couple different cities in California now, like the state, like we were talking Prop 22. But from the food delivery side, there's an imposition from local governments that were saying you need to cap how much you're charging the restaurants. So instead of going 20-30%, you can only do 15%. So what does capitalism do? They get creative, and DoorDash said, you know what? Fine, then we'll do that, but we're going to now implement a flat fee of $1 or $2 per order to cover for that cost. So regardless,
Yeah.
they're gonna get what they need because you have to cover the basis. And if people don't want it, don't order it. Like, and this is where I get a little frustrated with government trying to do the right thing has ramifications and
Sure.
consequences if they don't think it through sometimes. And business is business. I mean, they're here to make money. They're here to employ people, and whether they're employees or contractors, that's what makes the world go round at the end of the day. So I know you pulled up a chart. Thank you.
Yeah, DoorDash is definitely looking much more healthy of a chart than Uber. Uber's chart looks a lot worse. Um,
Mm.
but I think DoorDash is going to have a hard time getting over $195 a share. So,
Yeah, it's not
technically
looking too pretty.
speaking, it's going to be challenging for them, just
Get some
based
pretty
on their
hardcore
technical chart
consolidation
reading.
too. Yeah.
Yeah, I could see them going sideways a while, and I think that's partially just due to their valuation. I mean, they grew a lot this last year. Let me bring up my other screen. They grew a lot this last year, um, but their valuation is 63 billion. They're not EBITDA positive yet. They don't make money. They don't have any net income, and their yearly revenue is probably about 4 billion right now. So they're 12 times revenue and their valuation, which is a little hot. And they're not EBITDA positive yet. And so and they don't have a ton of cash. Like 4 billion is not a whole lot of money for a business really running through that much cash. And so, yeah, I think definitely going sideways is probably more realistic for this company because their valuation is so high. So, but Dash definitely looks better than Uber when I look at the charts.